Yo, what's up, everyone? It's your boy, Looney. Today, we're talking about something every trader and investor has to deal with eventually: red days. Yep, those bloody ones where everything looks like it's crashing. But me personally, I don't panic, I develop a plan. I'm going to show you what to do when the market dips, whether it's stocks or crypto. I treat these red days as opportunities and not disasters. Today, the market's down. We have Google's down, Bitcoin dipped, and a few of my other plays are taking hits. Before we get started, quick shout out to my Discord. I have a free Discord for anyone to join. And then I have a premium version for that Discord. You get weekly trade alerts, one-on-one coaching. I do live sessions. I do giveaways and newsletters. You can check it out. All links will be in the description. But anyways, here's how I manage it. Here's how I manage the red days or the red months or the red years. I mean, I don't want to go all the way that far, but the red months we could even look at. And one is I sell covered calls. So I have a lot of covered calls on Riot, Mara, and I plan to do one on SoFi to collect premiums even when the stock is falling. Now, covered calls aren't the best hedge, but they are still a hedge, and you get to collect extra income. What you decide to do with that income is very key. You could sell puts at lower strike prices if the stock is dipping. You can invest it into something else that will give a better return, or you just let it sit. You could let the cash just sit with Robinhood. There is I think it's 4 or somewhere in between 4 and 5% APY. So cash gets to earn interest, and you could just let it sit there until you see a better entry into whatever you're looking into, whatever you're positioning into. What I'm doing with that premium is I'm going to sell cash secured puts. I'm going to sell cash secured puts on SoFi at lower strike prices, bringing my cost basis down, and hopefully that brings up my total return. And that's what I'm trying to do. I'm trying to build a portfolio. Number 2, I just went over it, and that's selling cash secured puts. So stocks I want to own, like SoFi, and I might even do Hood in the future. Hood's a little out of the price range where I could do cash secured puts because it is trading at $41. So I need about $4,000 to sell cash secured puts, but they are great for dips, and you could get entry points at very cheap. If you get assigned, it's okay because you want to own the stocks, and you're basically buying low and you're getting paid to wait to get the stock. So that's what the premium does. And then number 3 is a combination of all these, and that's dollar cost averaging. So I DCA every day into these stocks, but also other stocks like Google or crypto, Bitcoin and Dogecoin and other cryptos. I do a little bit every day. Tesla, some now, and I buy small amounts consistently, especially when there are red days or when it's red. And you could also do this with selling options. Like I said, you could sell cash secured puts at a lower strike price, and that's essentially dollar cost averaging. You're bringing your average down, you're doing it consistently, and it's a great strategy for long term, and you build a portfolio. So I'm doing that. A good example is Sony. I'm doing $5 a day. It's probably the most I do on any stock, and that's because I'm trying to acquire 100 shares. So I'm putting $5 a day, and you get dividends for this stock, so I'm reinvesting that. And also, hopefully when I get 100 shares, I could sell covered calls and collect even more income and just build that portfolio. And I don't have the money, or nor do I want to put all money into Sony right now. I want to just put a little bit every day to catch the highs, catch the lows, to get that average, that dollar cost average, and get the average of Sony, hopefully bring my average down. Do I pause? Sometimes I do pause if the stock's really running up and I just want a better entry and wait till they pull back. Sometimes yes, but a stock like Sony, I don't really care too much because it's a cheaper stock, so it's fine with it dipping a little bit. But I don't try to time the bottoms. I really just prepare for them. Red days expose bad risk management. And if you're focused long term, it's just a part of the game. Again, my options are helping out year to date, up 20%, although my actual portfolio is down 15%, which is really low because of crypto. And I'm really exposed to crypto. So one of my new strategies is to cut back on exposure to crypto. So maybe not go as hard on Riot, not because I'm not bullish, but just because I don't want to over leverage my positions and I want a good balance. So that's why I'm doing SoFi mainly and Sony and Hood. And these are very similar. I mean, they overlap, but great positions for long term. And yeah, it's just a game. These pullbacks is part of the game. There's going to be highs, there's going to be lows. It's not going to go up forever. And hopefully, and at least in the past, it's not going to go down forever. During a recession, you can see months of red, and I'm not sure if we're heading there, but we'll see in the next few months how the inflation reports come out and interest rates come out. I'm pretty interested. What do you guys think? Do you guys think that we will reach a recession? Do you think we're going to stay at these levels for a while, or we're going to shoot back up and kind of restart that bull run that we saw early of Q1 and late Q4 of 2024? So while everyone's panicking or panic selling, I'm personally positioning. I'm doing covered calls, puts, DCA, and that's my trifecta for surviving red days. And like I said, drop another comment. If you're buying, selling, or just watching the madness, like, subscribe, and join the Discord for real-time trade breakdowns and alerts. Until next time, peace.